I want to begin by welcoming each of our nominees and thanking you for your willingness to serve. Public service is never easy, especially at a time when Democrats seem more focused on political games and shut down theatrics than on governing through regular order. As a matter of fact, four of you have one thing in common that will stop you from getting nearly a single Democrat vote. You were nominated by Donald J. Trump, plain and simple. Not your qualifications, not your amazing stories, not your strong commitment to our country. One thing stands in the way of getting maybe any votes on the left. Even though, frankly, Travis, you, I think, went through unanimous consent last time, basically. Times have changed since you've been here. But I thank you for your willingness to continue to serve. I'm using your microphone because mine's broken. Each of you has stepped forward at a critical moment for our country, and I appreciate your commitment to serving the American people. Today's hearing is about more than confirming individuals to important posts. It's about making sure that the institutions that drive our economy, bolster our housing market, and grow our global footprint are effective and focused on expanding opportunity for hardworking families across this remarkable nation. The agencies represented here today touch the daily lives of Americans in ways that often go unseen but are deeply felt. From the homes we buy, to the money we use, to jobs supported by American exports. Mr. Gormley and Mr. Cassidy, your leadership at Ginnie Mae and FHA will be central to ensuring that our housing finance system remains stable, fair, and accessible. Millions of families dream of owning a home. I know we did. And that dream must be rooted in sound policy that protects both borrowers and taxpayers. I'm hopeful that under your guidance, these agencies will continue to strengthen access to affordable housing while maintaining the fiscal responsibility that working families expect. Acting Chairman Hill, your role at the FDIC is equally critical. The Deposit Insurance Fund is one of the bedrocks of confidence in our banking system. Safeguarding that fund and the trust of millions of depositors requires good judgment and accountability. I also look forward to hearing your perspective on important regulatory reform efforts, including on reputational risk and returning the focus of bank exams to the core principles of safety and soundness. Mr. Hollis, as Director of the U.S. Mint, you will oversee an institution fundamental to the integrity of our currency. Americans trust that when they hold a dollar, it represents strength and stability. Maintaining that confidence is essential to our economic leadership at home and, frankly, abroad. Together, these nominees represent an opportunity to restore trust in government institutions and to deliver results that improve people's everyday lives. At the heart of this committee's work is a simple but powerful principle. Every family deserves a fair shot at building a better life. That means sound markets, fair rules, and leadership that puts people, not politics, first. I look forward to working with my colleagues to move these nominations forward so that these nominees can get to work on behalf of the American people. Thank you all for being with us today, and I look forward to your testimony. Ranking Member.
Thank you, Mr. Chairman. So let's take stock of where we are today. The federal government has been shut down for 30 days because of President Trump's refusal to negotiate so that millions of families do not lose their health care. As a candidate for president, Donald Trump promised to lower costs for American families on day one. It is now day 283. The price of groceries is up, the price of utilities is up, the price of housing is up, and Republicans are now pushing the price of health care through the stratosphere. We should be focusing on rising costs for American families, but instead, we're meeting today to consider another slate of President Trump's nominees who I fear will do nothing more than rubber stamp Trump's agenda. My concerns are not political. My concerns are substantive. Mr. Gormley and Mr. Cassidy have been nominated to lead critical parts of the nation's housing finance system. At a time when the Trump administration is proposing to upend the housing finance market, we need mortgage regulators who are committed to the best interests of American homebuyers. But in their current positions at these agencies, these two nominees have advanced policies that increase costs and dismantle protections for American families. Mr. Hollis has been nominated to lead the Mint at a time when the president is cosplaying king and seeking to put his face on a $1 coin. I have questions about these nominees' willingness to follow the law, and I will have extensive questions for the record for each of them. I also have a very serious concern about Mr. Hill. Mr. Hill, who has served as acting chairman of the FDIC since January, has now been nominated to a full term. The job of the FDIC chair is to ensure the safety and soundness of the banking system, and Mr. Hill has done nothing but relax oversight of the giant banks, and we all know where that leads. It puts taxpayers, the economy, and the financial system at risk. I also have questions about Mr. Hill's commitment to improving the FDIC workplace culture. In 2023, public reporting shed light on serious allegations of longstanding sexual harassment, discrimination, and other misconduct at the FDIC spanning decades. An outside review validated many of these problems. When the former FDIC chair, Marty Gruenberg, first appeared in front of this committee last year, I was clear that it was his responsibility to fix this and called on him to implement all of the independent review's recommendations. Now, that is the responsibility of Mr. Hill. Mr. Hill was a senior FDIC executive from 2019 to 2022, serving under Chairman Jelena McWilliams prior to her sudden resignation amidst a Department of Justice inquiry. According to public records, this was a time when the toxic culture flourished. But there is no record, none at all, of Mr. Hill or Chairman McWilliams addressing these pervasive issues before they came to light in 2023. Now, in 2024, under the Biden administration, the FDIC board initiated a series of efforts to improve the agency's culture, including establishing a new Office of Professional Conduct. The board, including Mr. Hill, was very active in monitoring the transformation efforts. Mr. Hill at that time called it a top priority of the board. But Mr. Hill has said little on this issue after becoming acting chair of the FDIC. And the FDIC has yet to respond to my requests for information. I expect answers to these important questions before we vote on your nomination. The public deserves to know what progress has been made to improve FDIC's culture and whether your interest in doing so is genuine or only exists as part of an effort to stymie the agency's work when there's a Democrat as president. Now, there was supposed to be a fifth nominee in front of us today, Mr. Bryce McFerrin, President Trump's nominee to be Ex-Im's first vice president and the vice chair of its board. He withdrew his nomination to be Ex-Im's first vice president and the vice chair of its board after I raised concerns about his ties to a UK-sanctioned Russian company. But let me be very clear. Withdrawing the nomination is not enough. Mr. McFerrin should resign from his current position at Ex-Im. He simply should not be there. Thank you, Mr. Chairman. I yield back.
Thank you, Ranking Member. Before we go to the witnesses with their 5-minute comments, the Chairman of the Finance Committee, Mike Crapo, has responsibility on the floor as well. So I'm going to give you 2 minutes to make an opening statement.
All right. Thank you very much, Mr. Chairman, and I appreciate you breaking with the process here to allow me to do this. I do have to get back to the floor. Mr. Chairman, it's my honor to be here today because Travis Hill one of President Trump's nominee today to serve as chair of the Federal Deposit Insurance Corporation, worked for me, for this banking committee, when I was the chair of the committee, and did outstanding work in developing legislation that has been significantly critical for our banking industry. And when he went to the FDIC, gave great advice and support. And contrary to what the ranking member's comments were about him, he has been a strong, powerful leader in the banking and in the FDIC world for years, and has provided solid legislative leadership and now solid regulatory leadership. He's been at the FDIC since 2018, where he served as deputy to the chairman for policy and senior advisor to the chairman. In these roles, he advised Chair Yelena McWilliams on regulatory and policy initiatives, including implementation of the Economic Growth Act of 2018. In 2023, he was sworn in as the vice chairman after being confirmed unanimously by the Senate. He provided steady leadership as the agency faced challenges relating to the failure of Silicon Valley Bank and revelations of workplace misconduct. Beyond his professional qualifications, Travis is well-liked and respected by his colleagues. He has the experience and demeanor to continue driving change at the agency. President Trump made an excellent choice in selecting him for this position, and I look forward to supporting his nomination.
Thank you, Chairman Crapo. I will now swear in the nominees. If you'll please stand, rise, and raise your right hand. Do you swear or affirm that the testimony that you are about to give is the truth, the whole truth, and nothing but the truth, so help you God? Do you agree to appear and testify before any duly constituted committee of the Senate? You may sit down. Your written statements will be made part of the record in their entirety. Please keep your oral comments to 5 minutes. Mr. Gormley, you are now recognized.
Thank you, Chairman Scott, Ranking Member Warren, and distinguished members of this committee. I'm honored and grateful to be President Trump's nominee to lead Ginnie Mae and Secretary Turner for his continued support and leadership. I would also like to thank my family and friends, many of whom are in attendance today, for their love and support. I deeply appreciate it. The Government National Mortgage Association, or Ginnie Mae, plays a unique and critical role in the United States housing finance system by guaranteeing the timely payment of principal and interest on mortgage-backed securities, or MBS. These MBS are made up of federally insured or guaranteed loans, such as those from the Federal Housing Administration, VA Loan Guarantee Program, USDA's Rural Housing Service, and HUD's Office of Public and Indian Housing. The Ginnie Mae guarantee, backed by the full faith and credit of the United States, protects investors from credit risk and provides the confidence to attract global capital, which enables affordable home ownership and rental opportunities. Overseeing a portfolio of approximately $2.8 trillion in MBS, the President of Ginnie Mae provides leadership in executing the organization's mission, overseeing policy development, risk management, and operations to support stability and efficiency in the secondary mortgage market. The President of Ginnie Mae also plays a key role in outreach across the housing finance system, including with government agencies, MBS investors, Ginnie Mae issuers, and other important stakeholders. After graduating from Boston College and receiving my law degree at the University of Pennsylvania Law School, I've spent my entire professional career working on financial service issues, with much of that experience working on government-insured lending programs. I currently serve as the Executive Vice President and Chief Operating Officer of Ginnie Mae, where I'm responsible for the day-to-day operations of that organization. In the first Trump administration, I served in several senior roles at the Department of Housing and Urban Development, including serving as the Deputy Assistant Secretary of the Office of Single-Family Housing at FHA. During my tenure at FHA, we were able to make great strides in improving and making that program more efficient. I also have experience in the private sector, serving on the executive team of a large mortgage servicer, and I have a good understanding of the many challenges those companies face. Earlier in my career, I served as regulatory counsel at 2 different financial services trade associations, working on consumer financial compliance issues, and have a thorough appreciation for the important roles compliance and oversight play in the financial markets. If confirmed as President of Ginnie Mae, I would draw on all of these experiences to ensure the organization fulfills its mission of providing low-cost financing and ultimately making the American dream of home ownership more accessible and affordable for the American people. Thank you, and I look forward to answering your questions today.
Thank you. Mr. Cassidy?
Chairman Scott, Ranking Member Warren, and members of the committee, thank you for the opportunity to appear before you today. It is truly the honor of a lifetime. If confirmed by the U.S. Senate, I look forward to partnering with this committee to help more Americans achieve the dream of home ownership, a mission I know we all support. I want to thank President Donald J. Trump for the confidence he has placed in me through this nomination, and Secretary Turner for his steadfast support, friendship, and the inspiring servant leadership he brings to our mission at HUD. As the current Principal Deputy Assistant Secretary for Housing, I've seen firsthand the dedication and professionalism of the Office of Housing and Federal Housing Administration team. The progress we've made to date has been remarkable, and I'm humbled by the opportunity to continue that work should I be confirmed. I want to thank my mother, Mary Kay, my family and friends for their constant encouragement. I'm grateful that they could join me here today. I'm also proud to be a graduate of LaSalle High School, whose motto, "Enter to learn, leave to serve," continues to guide me. I'm honored that its president, Brother James Butler, is here today as a reminder of the teachers and mentors who instilled in me the value of serving others. Most importantly, I want to thank my amazing wife, Grace. She has been my rock, steadfast, patient, and supportive through every step of this transition from the private sector to public service. As many members of this committee know, public service is not just a personal calling, but also a family sacrifice. She has embraced that with resilience and unwavering faith in our shared purpose. I am profoundly grateful for all she has done, especially as we welcomed the greatest blessing of all earlier this year, our happy and healthy daughter, Margot Cassidy. They remind me daily that behind every housing policy are real families, just like mine, who deserve opportunity and stability. While our housing challenges are great, I'm confident that together we can meet this moment. I joined HUD after spending my entire career in the private sector, where I financed billions of dollars working with owners of multifamily, senior housing, and healthcare properties. That experience, working with lenders, developers, and operators, gave me a deep appreciation for the role FHA plays in supporting housing production and access to credit. But beyond my professional background, FHA is also deeply personal to me. While in college, I planned to rent an off-campus townhouse, but the owner offered me the chance to buy it. With an FHA-insured mortgage and 3.5% down, I became a homeowner at 20 years old. That experience gave me a firsthand understanding of the wealth-building power of home ownership, and it's the kind of opportunity I want to help expand for more Americans. My late father would always tell me, the only way to be successful in life is to help others be successful in life. That lesson continues to guide me in this work. The chance to lead FHA and the Office of Housing is truly the honor of my career. It allows me to serve my country while drawing on lessons I learned in my prior life and to work hand in hand with the lenders, developers, and policymakers who know both the strengths and challenges of our programs. I fully recognize that there are plenty of both, and that's why we focused on making steady, meaningful progress to improve our programs for the Americans who rely on the FHA. My top priority is to streamline and modernize FHA's loan programs, remove unnecessary barriers so that transactions move faster, costs fall, and practitioners can build more homes. As one example, within my first month at HUD, I initiated an express lane in our Section 232 healthcare program. For applications that meet strict underwriting criteria, this process accelerates HUD's review and approval timelines, reducing processing times from months to just weeks. In our single-family program, we've implemented a sweeping set of policy rescissions that will cut red tape out of our programs and more effectively deliver on President Trump's priority to reduce the cost of home ownership for Americans. The 12 sub-regulatory policies that we rescinded were unnecessary, burdensome for lenders and borrowers, and directly increased the cost of home ownership. At the same time, our commitment to protecting the safety and soundness of the FHA Insurance Fund is ironclad. We've taken steps to mitigate risk, and our capital ratio remains well above the congressionally mandated 2%. These are just a few examples, and there's more work ahead. Serving at HUD is a dream job, thanks to Secretary Turner, who is restoring the department's mission-driven focus, advancing self-sufficiency, and revitalizing communities nationwide. But we can't do it alone. Real progress depends on strong partnerships with Congress, the housing sector, and all FHA stakeholders, the builders, the lenders, and local leaders who make housing opportunity possible. I applaud this committee's bipartisan work on housing policy and your continued engagement with HUD. Together, we can expand opportunity and help more Americans achieve the dream of home ownership. Thank you, Chairman Scott, Ranking Member Warren, and members of the committee. I look forward to your questions.
Thank you, Mr. Cassidy. Mr. Hollis.
Thank you, Mr. Chairman. Chairman Scott, Ranking Member Warren, and distinguished members of the committee, it is an honor to appear before you today as you consider my nomination to serve as the Director of the United States Mint. I'd first like to thank President Trump for this opportunity to serve our nation, and I would also like to thank Secretary Bessent for his confidence in me. I'm also grateful to the members and the staff of this committee who have taken the time to meet with me. I appreciate these opportunities to discuss your priorities, and if confirmed, I look forward to working together. I'd also like to thank my family. My daughter, Bree, is here with me. She is in her senior year at the University of Alabama, where she is a straight-A student. She's never made a B in her entire life. Also, my son, Zachary, is here with me. He's also a straight-A student, and last month he was elected student body vice president. I'm also joined by my two brothers as well as friends and associates. One of my earliest and most vivid memories dates back to when I was just 7 years old. My grandmother had given me a coin that she'd saved during the Great Depression. That small gesture left a lasting impression that quietly steered the course of my life. Today, I keep that coin that she gave me nearly half a century ago as a tribute to her. I've kept the coin in my pocket at every important milestone in my life. And of course, it is here with me today, along with the catalog of coins that I made when I was only 8 years old. Our nation's coinage is far more than just metal. Our coins encapsulate America's history. Every coin carries with it a thoughtfully crafted design that is rooted in our shared heritage. As a child, I was drawn to these links between our past and our present. While my classmates would give oral reports on Babe Ruth and Amelia Earhart, I would speak about David Rittenhouse, the first director of the United States Mint back in 1792. From an early age, coins were never just money to me. They were tangible links to our nation's history. That childhood passion grew into a lifelong pursuit. Over the past 30 years, I've built a respected career in numismatics. I've served 14 years in public office. I've published a book on the history of United States coinage. And I've continued to share the educational power of our coins with audiences nationwide. My public service includes 12 years as a state representative in the Louisiana State Legislature, and I was elected in 2023 as one of 8 elected members of the Louisiana State Board of Education. These roles have sharpened my ability to unify diverse voices, navigate complex systems, and to deliver results within tight guidelines and timelines. As my background illustrates, I have spent a lifetime preparing for the role of Director of the United States Mint. Throughout my career, I have demonstrated the ability to build coalitions and also to inspire trust. I'll bring this same energy, optimism, and leadership style to this next chapter. If confirmed, I'm committed to guiding the United States Mint, a multifaceted organization with responsibilities spanning production, design, law enforcement, marketing, and much more, and to also strive for additional efficiencies. If confirmed, I will work diligently so that I can return to Congress in the future and share an annual report that delivers a significant transfer to Treasury. As we approach America's 250th anniversary, it is vital that we have a passionate ambassador for both our circulating coinage as well as our commemorative issues. My passion and experience that spans many decades has equipped me to energize audiences, share the captivating stories behind our coinage, and to promote new designs with enthusiasm and vision. If confirmed, I am confident that I can lead the United States Mint through this exciting and vital time in our nation's history. With decades of public service and a lifelong devotion to numismatics, I'm ready to bring my leadership to an institution as iconic and essential as the United States Mint. My journey has led me to this role, and if confirmed, I'll be truly honored to serve. Thank you again for your time today, and I look forward to answering your questions.
Thank you, sir. Mr. Hill.
Thank you. Thank you, Chairman Scott, Ranking Member Warren, and members of the committee. It is a tremendous honor to have been nominated by President Trump to serve as Chairman of the Board of Directors of the Federal Deposit Insurance Corporation and to appear before you today. Joining me this morning are my wife, Lauren, and children, Wesley and Whitney, while my son, Wade, is busy at preschool. I am also joined by my parents, John and Nicole, who are visiting from New York. I am continually grateful for all their support over the years. I have served as acting chairman of the FDIC for the past 9 months. During this time, we have been hard at work to improve many aspects of our regulatory and supervisory approach across a number of different areas, while continuing to fulfill our core mission of promoting the safety and soundness of banks and the stability of the banking system. Our ongoing work includes, among other items, reforming supervision to focus more on material financial risks and less on process, improving our readiness to resolve large financial institutions, and making a range of adjustments to our capital framework. Previously, I served as vice chairman of the FDIC beginning in January 2023. During my time as vice chairman, the banking system experienced 3 of the largest bank failures in U.S. history, leaving us with many important lessons. The FDIC considered several significant rulemakings, and the FDIC began efforts to remediate deep-seated workforce culture issues, which remains a key priority for the agency today. From 2018 to 2022, I served as an advisor to FDIC Chairman Yelena McWilliams and as her deputy for policy. In this role, I led numerous policymaking initiatives, including a number of rulemakings and other policy efforts in response to the COVID-19 pandemic. Overall, I have spent close to 7 years at the FDIC in various capacities, and I have developed a deep understanding of and appreciation for the agency, its workforce, its storied history, and the important role the FDIC plays in our economy and financial system. Prior to joining the FDIC, I spent 5.5 years working as a staff member for this committee. I am extremely grateful to Senator Crapo and former Senator Shelby for those opportunities and for their leadership. During that time, I was heavily involved in a number of legislative efforts, including the Economic Growth, Regulatory Relief, and Consumer Protection Act, or S-2155, which was signed into law by President Trump in May 2018, and which continues to guide many of our regulatory efforts today. Through my experience at the committee, I developed a thorough understanding of our statutory and regulatory framework for banking policy, an awareness of the difficult trade-offs that policymaking often entails, and a deep appreciation of the vital oversight role that Congress plays. Over the course of my career, I have repeatedly observed the importance of a well-tailored regulatory framework that strikes an appropriate balance between allowing banks to take risks to power economic growth and serve their communities, while ensuring a safe, sound, and resilient banking system. If confirmed, I look forward to working with members of this committee to ensure the FDIC continues to fulfill its critical mission. Thank you, and I look forward to your questions.
Thank you very much. Thank you for your opening statements. I'll start my questions with Mr. Hill. When did you receive a unanimous vote?
I believe that was December 2022.
3 years ago. What changed? What have you done so poorly in the last 3 years that you go from a unanimous vote to now a very polarized, partisan reality? The answer is nothing changed with you, but a lot has changed in Washington. Is it the Schumer shutdown? Is it the failure of the Biden administration? Is it the devastation that the employees of the FDIC have had to endure under leadership from the left? So many things have changed, and unfortunately, you will be the victim of some of those changes. I would like to, however, discuss the culture at the FDIC and what have you done to change the culture that you inherited from Mr. Grunberg?
Sure. Well, thank you for the question, Senator. And let me say at the outset that harassment of any kind is completely unacceptable. There is no tolerance for it at the FDIC or at any organization. Reforming the culture continues to be a top priority. There are a lot of things that we have been doing throughout the year 2025. I think the linchpin of our efforts is accountability. In my view, the largest root cause of the problems was years of lack of accountability, and when people were not held accountable for misconduct, not only did that mean that bad actors continued to misbehave and engage in misconduct, but people also lost faith and confidence in the system. So we have 2 new offices, the Office of Professional Conduct and the Office of Equal Employment Opportunity. Those two offices have been live. They have been conducting investigations, ensuring discipline is imposed. And I think that's the biggest piece of the cultural transformation efforts. There are a number of other things that we have been working on. We rolled out new anti-harassment training earlier this summer. We have new processes for intake of complaints, for reporting, for tracking. We also have made significant leadership changes across the agency. Obviously, there have been changes at the board level, but also the majority of our divisions and offices have new leaders from the past.
Thank you. What are you looking forward to accomplishing with joint rulemaking with the OCC on unsafe and unsound practices and MRAs? Maybe 30 seconds.
Sure. So the core goal there is to shift the focus of supervision so it is focused on core material financial risks rather than process. I think SVB is a great example of a case where the bank had all sorts of financial problems, but the supervisory criticisms were all focused on process. And so I think the fundamental goal there is to reorient supervision so it's focused on the fundamental financial risks that matter most.
Thank you. Mr. Cassidy, you said something that I thought was really encouraging, surprising, and frankly sad for today's homeowners. You became a homeowner at 20 years old, 3.5% down. That's pretty exciting. Wonderful, actually. My mother became a homeowner at 38 years old. And today, once again, 38 years old is the average first-time home buyer. The ranking member and I have worked a lot on the issue of home ownership. I'd love to hear from you how you're going to work with this committee, private sector, and the housing stakeholders nationwide to frankly expand access to affordable housing. About 30 to 45 seconds.
Senator Scott, thank you very much for that question. As you mentioned, I personally benefited from the FHA, was fortunate enough to enter home ownership at a relatively young age. But for many Americans, that is out of reach.
Yes.
Housing is too expensive. And I am focused at HUD's Office of Housing and the FHA, working with our partners, lenders, homeowners to streamline these programs, to make them more efficient, to make them less costly. Since I've started in April under the leadership of Secretary Turner, we've been taking inventory, not just of HUD's programs, but FHA's programs, to figure out how we can get more Americans into homes. Since President Trump took office, a record 800,000 FHA borrowers became homeowners, many first-time homeowners. FHA serves a $1.5 trillion single-family portfolio, and it's really taking inventory of each FHA program, working with lenders, working with partners, working with the boots on the ground to make these programs more efficient. And I look forward, Senator, to working with you and your staff and the rest of this committee on these initiatives.
I appreciate that, Mr. Hill. I'll have some questions for the record that you are aware of. I'm running out of time, so Mr. Hollis, I will unfortunately not be able to ask you the questions I had designed for you, but I will say to Vice President Hollis, congratulations on your success politically, and to your daughter never making a B. I'm sure she's going to graduate cum laude. I graduated thank you laude, and so I'll look forward to her success as well. Vice President Hollis. I wasn't talking to the dude at the counter. I was talking to the son who won the vice presidential race for student government. Far more important than anything else. Ranking member. Yeah.
All right. Thank you, Mr. Chairman. So, Mr. Chairman, I'm going to take up exactly what you said, and that is what has changed since Mr. Hill was unanimously approved by the Banking Committee. So I want to talk about what's happened during the time that he has been at the FDIC. Acting Chairman Hill, you served as the FDIC's policy director from 2019 to 2022. During your tenure, the FDIC weakened key big bank safeguards, which led to the second, third, and fourth largest bank failures in American history. Now, in addition to deregulation, another clear cause of these failures was weak supervision, including an understaffed bank examiner workforce at the FDIC. After Signature Bank's failure, the FDIC's chief risk officer found, quote, frequent vacancies and continuous turnover on the FDIC's exam team for Signature, and more broadly, that an average of 40% of big bank exam positions in the FDIC's New York office had been vacant or filled by temporary staff in the years prior. The FDIC Inspector General cited similar staffing challenges in its review as one direct cause of the bank's collapse. So, Acting Chairman Hill, since you became acting chairman in January, have you increased or decreased the number of bank examiners at the FDIC?
Senator, I would disagree with a number of the comments that you made there. I don't think it's true.
Well, I'm just quoting the FDIC's own Inspector General that makes an independent evaluation here. So have you increased or decreased the number of bank examiners?
So as part of our workforce reduction plan that we did earlier this year, we went through a very thoughtful process and we evaluated what the proper number.
I'm not asking you for your process.
Yeah.
Have you increased it or decreased?
So with respect to safety and soundness examiners, that was an area where we generally preserved. So we did not make any affirmative cuts.
Did you increase or decrease the number of exam officers?
Yeah, so the total number of examiners, we made small decreases on the safety and soundness side, and that was essentially eliminating certain vacancies.
So the answer is decreased. In addition to that, in January, you rescinded at least 200 job offers to bank examiners. Then you reportedly cut the FDIC workforce by 20%, roughly 1,250 positions, in response to DOGE. Now, you refused to provide this committee with a breakdown of the staff reductions when my office requested them last April. So you don't get to come in here now and say, oh, I didn't cut any of the people you would care about. If you weren't cutting any of the people I cared about, you should have told me that last April. Look, you're not just cutting exam staff. That's bad enough. But you're also weakening the regulatory safeguards again. You recently supported a proposal that would reduce the capital cushions at megabanks by 27%, or $200 billion, and reduce their capacity to lend to businesses and households by over $2.5 trillion. Don't take my word for it. Former FDIC Chair Sheila Bair and Vice Chair Tom Honig, both Republicans, said this rule would, quote, make bank failures and risk of bailouts more likely, increasing risk to the Deposit Insurance Fund, as well as the banks and U.S. taxpayers who back it. Acting Chairman Hill, do you agree with the former Republican chair and Republican vice chair of the FDIC that this Wall Street giveaway would decrease lending to Main Street and increase the risk of bank failures, bailouts, and ultimately losses to the Deposit Insurance Fund?
I would strongly disagree with that. The capital impact and in aggregate at the parent company is less than 2%. The intent behind it is to return the leverage ratio to a backstop.
This is a 27% reduction.
That's not at the parent company.
Even if the FDIC admitted that the rule could increase these risks, buried deep in the proposal of the agency, it says, quote, a reduction in required capital increases the size and likelihood of losses, shifting from shareholders to creditors, that means depositors, and the Deposit Insurance Fund in the event of a failure. Such losses may lead to additional spillovers and costs, end quote. In other words, your own report, more bank failures and more taxpayer bailouts. I want to hit
that's one in a long list of considerations in the
You are also making it easier for criminals to exploit the financial system. Recent reporting has revealed how the biggest banks helped enable Jeffrey Epstein's crimes. It wasn't until Epstein was arrested in 2019 that J.P. Morgan finally reported nearly 5,000, overtime suspicious transactions. I will do a question for the record to understand how you are taking away the tool to investigate the other Jeffrey Epsteins out there. Thank you, Mr. Chairman. I apologize for going over.
Senator Kennedy, you now have 5 minutes and 50 seconds.
Thank you, Mr. Chairman. Mr. Paul Hollis, I've known him for a long time. He is a favorite son in Louisiana. He served honorably and admirably in our state legislature. He was on the Board of Elementary and Secondary Education. No more important job in my state. There's nobody in this country that knows more about coins and coinage and numismatics than Paul Hollis, and all of us in Louisiana are so proud of him. Mr. Hill, did you read the 234-page Cleary-Gottlieb report about the sexual harassment and the bullying and the touching and the sleaze and the racial discrimination at the FDIC under President Biden?
I did, Senator.
I'm going to clean up the language here because we've got kids here. Did you read the part of the report where one young female employee said that her supervisor looked her in the eye and described her as being, quote, like a grizzly bear with breasts, but he didn't use the term breast. Did you read that?
I did, yes.
Did you read the part where one FDIC supervisor asked a young female subordinate, quote, does your husband blank you?
I did, Senator.
You read that?
Yes.
Did you read the part of the report where one young female employee said her supervisor sent her a text saying, quote, get naked, blank?
Yes, Senator.
Did you read the part of the report where one female employee said that her supervisor at the FDIC, been there for years, sent her a picture of his private parts?
Yes, Senator.
Now look, I could go on all day. And you know what I've heard back? I've talked about this for a long time. You know what I've heard back from the FDIC? Nothing. Zero. Zilch. Nada. I haven't heard from you. Last time I checked, 97 employees at your agency, if you're confirmed, reported repeated instances of sexual assault, sexual advances, and unwanted touching. 91 other employees reported repeated incidents of sex discrimination. 187 employees reported repeated incidents of bullying and threats. 191 employees reported repeated incidents of racial discrimination. Did you read the part of the report, Mr. Hill, where an Hispanic employee said that his supervisor asked him to recite the Pledge of Allegiance to, quote, prove that he was an American? Did you read that?
I did, Senator.
Did it make you proud?
It did not.
You've been there since January, right?
That's correct.
I heard you talk about transparency and accountability. Those are pretty words. I want a report within 30 days about what's been done. I want to know who's been fired. I want to know who's been prosecuted. I want to know who's been moved around with so-called demotion, taking care of their brother-in-law, and got a bonus.
We can certainly provide that for you.
Well, you better, because I'm going to tell you, I'm not sure I'm going to vote for you. I've had enough of this. I have had enough of this. And if your name came up in front of me right now, I wouldn't vote for you.
Senator,
It's got nothing to do with your policy chops, but I have had enough.
Yep.
I have had enough. This is not an isolated incident. And I've talked about this repeatedly, and I've heard nothing from you, Mr. Hill, and I've had nothing from your agency. And you know what I assume? Look, I trust everybody. I believe in the adage, trust in God, but tie up your camel.
Senator, we are fully committed to cleaning up the agency.
Yeah, well, you got 30 days.
Yep.
Or whatever I just said. I'll stick to whatever I just said to give me a report about what's happened to these people.
We will do so.
And otherwise, you can forget about my vote. Thank you, Mr. Chairman.
Senator Smith?
Thank you, Mr. Chair. And welcome to the committee, everybody. I'm going to direct my questions to you, Mr. Cassidy. I appreciate how both the chair and ranking member talked about the importance of home ownership, and I'm really proud of the bipartisan work that we've done on this committee to address some of the underlying systemic challenges around home ownership. So, Mr. Cassidy, this is what I want to talk about. You know, yesterday, in fact, I was talking to a group of young folks in my office who were telling me how the idea that they're like in their late 20s, the idea that they'd be able to own their own home just seems almost unreachable, completely out of reach. And in fact, that is the case in this country. This is a bipartisan failure, I would say. And one of the things that we know through evidence is that the attaining home ownership can really be supported and advanced by housing counseling. We know that this works. It's really, really important for first-time home buyers. It's extremely valuable for folks who are, buying their first home and maybe their parents didn't own their own home. Housing counseling is really helpful in making sure people understand, like, what's affordable, how do they go about it. And so my first question is, earlier this month, the Trump administration terminated, as I understand it, 400 employees at HUD, and this had a huge impact on the Office of Housing Counseling, severely reducing the available support for first-time home buyers and low-income home buyers. So I want to ask you about that. Can you tell us what this is about, and how does these kinds of RIFs or layoffs or whatever you want to call it actually support what I hope would be shared goal towards expanding access to home ownership?
Senator Smith, thank you very much for that question. As you wisely noted, the average age of home ownership has gone from mid-20s to 38, and enough. We are focused on putting more Americans in homes and using the programs within HUD's Office of Housing and the FHA. You referenced housing counseling. As you know, those reduction in force are currently under litigation, so I'm unable to discuss the exact details on that topic. I do look forward to discussing with you when the time is right. What I can say is that under the leadership of Secretary Turner, we are working across not just HUD, but particularly the FHA, to take inventory of FHA's loan programs to make our programs more efficient for the homeowners that we serve.
But I'm sorry to interrupt, but I only have two minutes. And so, okay, so you won't talk to me about how many folks have been RIFed or what the level of folks are that are in this job, but I mean, would you acknowledge that this housing counseling has helped over 850,000 households get access to home ownership? I mean,
Senator, housing counseling plays an important role. Since the beginning of the year, under the Trump administration, we've had 800,000 new homeowners utilize FHA loan programs, many of which are first-time homeowners.
But did you not zero out wasn't your recommendation to zero out the budget for housing counseling?
Senator, we are focused on working with states, localities, local nonprofits who understand the issues within their community.
But doesn't housing counseling already work with those nonprofits? I mean, the partnership between the HUD, Housing Counseling Service and nonprofits is important, but are you suggesting that it should all be just outsourced to nonprofits and that they can do it all? Because I don't think that's what I think.
Senator, housing is very much a local issue. We believe that local leaders on the ground, nonprofits, understand the issues that work in their jurisdictions. So that's what we are focused on.
So does that mean that you think that HUD shouldn't have a role here, that housing counseling services that HUD has provided are useless and shouldn't be done?
HUD does serve a very important role. Office of Housing Counseling will continue our statutory requirements, and we are focused on
Congress has passed laws about this.
Mm-hmm. Absolutely. And we are focused on working with states, localities, boots on the ground, local nonprofits that understand their housing issues, and that work will continue.
Well, it's hard for me to, Mr. Chair, I'll yield back, but it's hard for me to understand how Housing Counseling Office at HUD can continue to do good work if there's nobody there. to do the work, and when you're proposing to zero out the budget. So it seems like it might be a figment of people's imagination that it would, the work would actually continue. And I would just point out that since Congress has supported home counseling, I think it is completely inappropriate for HUD to just say, for the Trump HUD department to say, no, we're not going to do it anymore.
Senator,
Thank you, Mr.
Yes, ma'am. Senator Tillis.
Thank you, Mr. Chair. Congratulations to everyone. I hope I have time to get to your questions. If not, I'll submit them for the record. I want to start with Mr. Hill. Actually, I do want to start with Mr. Cassidy. I'm going to be supporting your nomination. I hope to ask you a question about HUD, but it's in part because I think you've got the right skills for the job, but in part because you showed good judgment by hiring one of my staff who's back in the back of the room right now, I think. So thank you for being here today. Mr. Hill, on a serious note, I'd like for you to take a minute. I don't think Senator Kennedy gave you much opportunity to do anything but answer yes/no questions. The FDIC, you were here, you were walking these halls when they politicized the FDIC, they forced McWilliams out. Just think about Chopra, think about all the horrible things that are, I think in some cases, still there in the agency that need to be cleaned up. But if you'd like to take a few minutes to provide a more fulsome response to Senator Kennedy's questions, I'd like to grant you that time.
Sure. Well, thank you, Senator. So as I mentioned in response to the chairman earlier, we are doing a long list of things to ensure that we are seeing the cultural transformation through. Harassment is totally unacceptable in any form at the FDIC or any place else. The linchpin of our efforts is really accountability and holding people who engage in misconduct accountable. We have two new offices that we have set up, the Office of Professional Conduct and the Office of Equal Employment Opportunity, and those two offices are responsible for investigating allegations and making sure that discipline is imposed if there is misconduct. So it is really a sea change from the way things had worked previously, and so those offices are live, they're running, investigations have been underway. There have been a number of examples of discipline. People have been removed, suspended, et cetera, based on the nature of the conduct. There's a lot of other things like new training, new processes for intake, tracking, things like that. But I think accountability is really the biggest piece of it.
Have you all started with any, because I do know that a lot of what's motivating Senator Kennedy is we were so frustrated for all the violations that were occurring in plain sight that I view you as part of the solution, not a part of the problem. But have you began any sort of environmental or sensing surveys or sensing sessions with staff to see if we're already beginning to move in the right direction? And just give me a little bit more feedback on that before I try and ask you a policy question or two.
Sure. So I have done a series of town halls throughout the year. I have raised issues related to culture in many of those. I've had many conversations both in large groups and in individual groups. We are working on doing a corporate-wide survey. I think we're still working on what the timing of that is going to be, but the intent would be that that's something that we do on a recurring basis to make sure we're getting the pulse of where the organization is.
Does the FDIC have a code of conduct?
We do.
I'd like for, just for the record, if you could send that along to me. I'm kind of curious. I've had a code of conduct in my office since I had one staff in the state legislature, and I have it up here. And it'd be interesting to see whether or not that is something else across the whole of government that we need to review and make every staff attest to every year. And if they violate it, they should be gone by the day the sun sets.
Absolutely. Happy to share that.
Thank you. Today I released a draft of Ensuring Fair Access to Banking Act. It's legislation that seeks to end both financial institution-related and regulator-initiated instances of politicized debanking. Can you give me an example of how previous regulators have weaponized the examination process and politicized debanking? There's a lot of them, so pick the best.
Yeah, sure. Well, I think Operation Choke Point is probably the one that was most noteworthy from the Obama administration, where certain types of law-abiding businesses were targeted, and the examination process was used in improper ways.
Mm-hmm. If you're confirmed, I intend to support your nomination. We'd really like your help in reviewing the bill. Can I get your commitment, actually, if you're confirmed, that we can get technical assistance and support from your agency to see how we get this right, maybe get support in this Congress?
Absolutely.
Mr. Cassidy, I am going to ask you a question. Tell me how you think your, well, first off, I always say this with anybody in HUD, and I'm about to be cut off. So I'll submit it for the record. But the first thing I hope you will list as a priority is looking at all the regulatory impediments that people are begging for every day that increase the cost of affordable housing and dig the hole that we'll never get ourselves out of until we recognize it is a critical component of delivering on affordable housing. And if you could submit a response to the record, I'd appreciate it.
Mr. Van Hollen.
Absolutely. Thank you, Mr. Chairman. Mr. Hollis, if I could start with you. Are you familiar with the law that was passed by Congress back in 1866 that says that the United States shall not, print any currency or coin with the portrait or likeness of a living person?
Senator, thank you for the question, and I do have vague familiarity with what you reference.
Well, the reason I raise it is that the reasons that were provided for passing that law at the time was to prevent currency from being used as a vehicle for personal aggrandizement or self-honoring portraits of living officials, to avoid the appearance of a monarchy. Another reason was to preserve the dignity, neutrality, and non-political character of U.S. currency by avoiding living figures who might be controversial, subject to change, or still actively involved in public life. President Trump is still actively involved in public life, is he not?
Yes, Senator, he is.
Are you aware of the reports that surfaced earlier this month that the Treasury Department and the Mint was talking about making a coin, a $1 commemorative coin with the likeness of Donald Trump?
Senator, while I'm not at the Mint currently, I have just in social media passages of seen links to articles, so I do also have vague familiarity with what you're referencing.
Yeah, I thought I saw a social media post by someone at the Department of Treasury confirming the truth of this report. Did you see that?
No, Senator, I didn't see that.
Okay. Well, if true, it would be clearly in violation of this provision of law. Do you agree?
Senator, I will assure you that just in my 30 years as a professional numismatist, with my 14 years in elected office being professional and high integrity, if confirmed, will bring that same sort of character to the Mint. And I will also share with you that I will always be in compliance of the law.
Okay, so you won't participate in the minting of any coin in violation of the law. Do I have your assurance on that?
Senator, I will absolutely consult with legal staff at the Mint, and you have my absolute assurance that I will always be 100% compliance of the law. Yes.
Because reportedly on one side of the coin is Donald Trump's likeness, on the other is fight, 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 which of course is exactly what is on the meme coin that the president has used to help enrich himself in office. Every time that meme coin there's a transaction, he and the Trump family profit from it. And would you agree it's inappropriate to print a coin for public use with fight, fight, fight on it when that mirrors exactly the Trump meme coin slogan?
Senator, while I appreciate the question, when it comes to opinions on something like that, I tend to be more ears than mouth, and so before I'd share with you my opinion, I would want it to be more informed than it currently is, but I will assure you that I will speak with all the appropriate people before making an important decision, if confirmed, for the United States.
Well, it doesn't seem like coincidence, obviously, that the fight, fight, fight slogan is on the coin that Donald Trump, the meme coin that he is selling and his family's selling for profit, and what is proposed on this other coin. It seems very clear that it's outrageous. It's illegal to put the president's likeness on an official coin, and it's even more outrageous that it corresponds to the coin, the meme coin that the president is profiting off of. That seems to me to be clear on its face. Let me ask you about a currency that we have been working for years to try to bring into existence, which is the Harriet Tubman $20 bill, something many of us have been involved in. If confirmed, would you ensure that the project stays on schedule while maintaining the highest standards for design and security?
Senator, I appreciate the question, and I would refer you to those in the Bureau of Engraving and Printing when it comes to anything dealing with currency. As you're aware, the United States Mint only deals with our nation's coinage as well as our metals.
Right. I appreciate that. You'll be in that ecosystem, so whatever you can do to help push that forward, I appreciate it. And finally, I will just say, Mr. Cassidy, I was listening to your back and forth with Senator Tina Smith, and I have to say many of us are extremely alarmed about the rifts that have been made at the Department of Housing. It does not make it more efficient. It will slow down, especially the FHA loan process. A federal judge recently said that these layoffs were done in, quote, political retribution because of the shutdown. That's really outrageous. And I hope you will go back and reconsider those actions. Thank you, Mr. Chairman.
Yes, sir. Senator Moreno.
Thank you, Mr. Chairman. And actually, I'd like to start where the chairman began this hearing about an hour ago, mostly speaking to the families here for a second. This is an enormous honor that your sons, that your husbands, that your fathers have been nominated to. And nothing that's said in this hearing will take away that honor. So leave here with a big smile on your face and know that they have accomplished an incredible thing to get through this door. And congratulations to all of you by being nominated by the President of the United States to serve. You're men of great integrity. You should be very proud of what you've achieved to date. Mr. Hill, let me start with you real quick on just some quick cleanup. The Wall Street Journal is the one that actually broke the story about what happened at the FDIC. Is that accurate?
That is accurate.
And that was in basically November of 2023. Does that sound about right?
That's right.
Prior to November of 2023, did any member of the committee that was in charge, my predecessor, Sherrod Brown, did he say a word about anything that was happening at the FDIC prior to the Wall Street Journal article?
No, sir.
So not one word, not one memo, not one letter was sent to the FDIC, and this had gone on for decades, well before you were there, correct?
As far as I'm aware.
So it wasn't until the Wall Street Journal publishes an article, shames the majority, and that was in November of 23. It wasn't until May of 24 that he was even asked to resign. Is that accurate?
That sounds correct.
May of 24, 6 months go by, where they highlight this incredible abuse situation, and Democrats don't say a word until May, after their primaries. I find that little data point very interesting because my opponent, Sherrod Brown, hid like a scared animal around this story during my election. It wasn't until after the primary that he all of a sudden became very courageous about speaking up. And have you ever found somebody who resigns from their job but then stays in the position?
Certainly very unusual.
No, so just we all understand this because this is insane. So he resigns after being called on to resign, but then stays in the job. Stayed in the job until January. Never have I seen somebody stay in a job after being disgraced, called on to resign, and still get a paycheck. I just want to just level set there. Were you personally accused in any way whatsoever?
Absolutely not.
And were you there the 18 years that he was there?
I was not.
So this scandal went on for 18 years, 10 years when he was chairman, and you've been there for 10 months, and you're getting criticized for that? I'm just going to move on from that because it's outrageously stupid. All right, let's just move on to Mr. Cassidy and Mr. Gormley for a second. And let's do a little Mythbusters Washington edition. How's that sound? The ranking member said housing costs are up. That's interesting. That was new information to me. Are you familiar with the National Association of Realtors, yes or no?
Yes.
Yes.
Are you familiar with their Housing Affordability Index?
Yes.
Yes.
All right, so you understand that 100 means that means the median family income can afford a house. Is that right?
Yes.
Are you aware that that's actually gone up 6.5 points since January? Meaning houses have become 6.5% more affordable since the beginning of the year. Are you aware of that?
Yes,
Yes.
Senator.
All right, now let's break that down regionally, you tell me, what do you think is happening here? In the Midwest, we have an affordability index of 135.6. The South has an affordability index of 109.3. The Northeast has an affordability of 98.7, and the West has an affordability of under 75%. What do you think those communities have in common? Meaning, why do you think it's so unaffordable where you have blue state governors, blue state mayors, blue state counties versus Republican-run states, Republican-run counties? What do you think is going on there? Do you think it's maybe the policies of those local communities that have made housing unaffordable? And how many hearings did we have here during the Biden years about housing affordability when it went through terrible iterations? I'll break the news to everybody, never. So, Mr. Cassidy, Mr. Gormley, what do you have tell me what your true North Star is. What are you going to focus on in your jobs when it comes to housing?
Senator, thank you very much for that question. We are focused on taking inventory of all FHA's and HUD's loan programs to deregulate, to streamline, to cut back on government overreach, which has driven up the cost of housing for everyday Americans. I look forward to working with you and your team on that initiative.
Real quickly.
Yes, Senator, thank you for the question. Ginnie Mae will continue to serve as a conduit for global capital that enables affordable homeownership and rental opportunities, and we will persevere to make that more efficient and attract more capital.
Thank you. Mr. Chairman, can I ask that the Housing Affordability Index numbers be put into the permanent record so that we can make certain that there's no political misinformation that's being shared publicly that says that housing costs have increased when in reality housing has become more affordable this year as a fact?
Yep.
Can we put that into the record?
Without objection. So ordered. Let's see. Senator Reed.
Thank you very much, Mr. Chairman. And first, Mr. Hill, I have to recognize Wesley and commend him on his behavior. And then Whitney is here too, and commend her on her behavior. And Wade is, I know, watching from afar. But let me go ahead and open up a sort of a major set of issues, Ms. Hill. The FDIC has proposed rules to give the biggest Wall Street banks significant relief by cutting their leverage capital requirements and making it more difficult for bank examiners to raise red flags when they spot risky activity. The FDIC has issued these proposals just as we're seeing cracks form in the credit markets. The sudden collapse of the auto parts maker First Brands and subprime auto lender Tricolor have created significant losses for some banks. In hindsight, the risks seemed obvious, but hindsight is always 20/20. And we're in a situation where we're lessening the safeguards, the guardrails, when we're beginning to see at least a few incidents like that. In another aspect, over 6% of subprime auto loans are in delinquency, which is a significant, it's the highest on record. Americans' credit card debt is very, very high. So I'm concerned that we could be on the verge of a substantial deterioration in lending standards. What is the risk of these events that are developing to the banking system? And are we going to be in a situation where we're going to regret loosening sort of the examination criteria and the leverage requirements in banks?
Well, thanks for the question, Senator. So first on the question about economic and banking conditions. So this is certainly something that we're following very closely. Generally, conditions appear to be favorable. We have had strong GDP growth last quarter. Most of the metrics that we look at the banking industry still appear strong. We just made it through most of bank earnings season, and most banks exceeded expectations. We have seen several noteworthy bankruptcies. You mentioned a couple of them. Those appear to be idiosyncratic issues. We've had some allegations of fraud and double pledging of collateral and things like that. But nonetheless, as the bank supervisor and resolution authority, we are still vigilant and paying very close attention to see if there are additional cracks that could emerge. When it comes to our regulatory and supervisory approach, I think at a high level, what we're really trying to achieve is modernizing our approach, being smarter about our approach, ensuring that we're striking the right balance between safety and soundness and economic growth. And so, safety and soundness continues to be the core underpinning of everything that we do at the FDIC. With respect to the capital proposal, the decrease in capital at the parent company in aggregate is less than 2%. The intent there is to return the leverage ratio to a backstop on a more frequent basis. So again, I think overall, I still support rigorous capital standards. The system is still very well capitalized. And as I said before, we will remain vigilant when it comes to banking conditions. And in terms of our overall approach, we're just trying to be smarter about things.
Well, you have to be very vigilant because we, prior to 2008, had the sense of everything's fine and we're doing okay, and then suddenly it fell apart. We don't want to do that again. Mr. Cassidy, first question, is brother here?
Yes, he is.
Thank you, brother. Mr. Cass and I are products of the Christian Brothers. Thank you, brother. I have a real question, though, too, which is that we spoke yesterday in our meetings about 221D4, Section 221D4, and it is not being used vigorously. Only 143 multifamily units were using it in FY24. You're going to try to reinvigorate it. What regulatory changes can you take, and more importantly, what statutory changes Congress should take to energize this program?
Senator, thank you very much for that question. It was great to meet with you in your office yesterday. I know we both share an understanding and a passion for the FHA 221D4 program, which offers some of the best construction financing available in the market. It's one of the few tools that the federal government has to actually bring more housing online. The problem is that it takes too long. These deals can take 12, 18 months to get finished. No loan should ever take that long, especially when you're dealing with 200 and 300 unit developments. Coming from the private sector, I've worked with these developers, and I understand that the enemy of a good deal is time. We are looking at taking inventory of that program, speeding up processing times so that we can deliver financing to create more units, not just in the state of Rhode Island, but across the country.
Thank you, Mr. Cassidy. Well, I hate to cut you off, but we're running about a minute over.
Thank you very much, Mr. Cassidy. Thanks, brother.
Senator Hagerty.
Thank you, Mr. Chairman. Mr. Hill, I'd like to start with you, if I might. I'm sure you spent plenty of time going back to the horrors of the failures of Silicon Valley Bank and what took place in that period. So if you go back with me again, back to the spring of 2023, at that point, I want to ask you whether there was significant deposit migration from regional banks and smaller banks to the largest banks in America. Was that the case?
Senator, that was the case. The Federal Reserve's H8 data, which shows weekly deposit flows, did show the week after the SVB failure, there was a substantial outflow of deposits from mid-sized banks and inflows of deposits into the largest institutions. And that was consistent with our supervisory experience and some of the additional papers that have come out from the Federal Reserve looking at payments data through the payment system and other data sources.
Yeah, indeed. I was watching this with my staff very carefully, and the concerns were enormous. Indeed, hundreds of billions of dollars of deposits fled from regional banks and community banks to the largest banks in America. And you ask yourself, why is that? Why did that happen? It's because the biggest banks in America benefit from a perceived government guarantee that smaller institutions just don't possess. Is that perception that precipitated the type of run that we saw? And this perception of, quote, too big to fail on depositor behavior poses a grave risk, in my view, to regional and community banks. It's yet another threat to the community banking system that's already lost 3,600 of its institutions since 2010. That's a 45% decrease in the number of community banks in America since 2010. We don't need to be doing things that would accelerate that even further, in my mind, because the banks that lend to small and medium-sized companies are the small and medium-sized banks. They're the ones that undertake the credit scrutiny. They're the ones that do that work. Yet we have a system of incentives in place right now, unintended, I would say, that precipitated the type of behavior that we saw in the wake of Silicon Valley Bank's failure, with this massive migration to the tunes of billions of dollars of money flowing out of the regional banks, the small banks, into the larger banks. So to strengthen the position of these banks, the regional banks and the community banks, I've introduced the Main Street Depositor Protection Act alongside my colleague, Senator Alsobrooks. This bill expands insurance coverage for non-interest-bearing transaction accounts, such as payroll and operating accounts. And to be clear, this is not a wholesale increase in the deposit insurance limit. This expansion is very narrowly targeted only at non-interest-bearing accounts. These are accounts that are primarily used by small and medium-sized businesses to run their payrolls, to manage day-to-day business operations. These are not savings accounts that are being held by high net worth depositors. These are the deposits that small companies use to run their businesses. We can't see these flow from small and medium-sized banks to large banks if there's ever another scare. These are precisely, though, the types of deposits that fled from smaller banks to the largest banks back in March of 2023. So, Mr. Hill, I've got a very basic question for you. If you could explain how expanded coverage actually reduces the probability of default that would be caused by a run on these uninsured deposits.
Thanks, Senator. Well, one of the big benefits of deposit insurance from a public policy perspective is it takes away the incentive for those depositors to run. So all else equal, an expansion of deposit insurance would create a more stable funding base where there would be a reduced incentive for depositors to run.
I think that's absolutely right. And I think for this reason, expanded coverage could actually lower FDIC resolution costs, because these sort of unnecessary bank failures that would result from a run won't happen because of the expanded coverage. One last thing I'd like to cover with you, Mr. Hill, and that gets back to your discussion with Senator Moreno and with others that has to do with the FDIC governance in the past. And I know there's been a lot of focus on the toxic culture, the environmental problems there. I think you're going to have a real challenge, should you be confirmed, to address all of that. But I've talked about this. I think you understand the management challenge there. There's another issue as well, and that's just basic competence. After I saw what happened that weekend when Silicon Valley Bank failed, and I saw the FDIC under Chairman Greenberg fail that auction and deliver a disaster on Monday morning, it became very clear to me that there's a competence issue there as well. And I hope that you'll undertake a very thorough report on what failures occurred when that FDIC failure to achieve a buyer that weekend, what actually transpired that resulted in the tragedy that we saw that Monday morning when that bank should have reopened and it did not. So I'd encourage you to undertake a study, and I'd love to hear back from you once you determine what the competence issues are at the FDIC and how you'll fix them.
Sure, happy to do that. Thanks, Senator.
Thank you very much, Mr. Chairman. Madam Chair, I'll submit the remainder of my questions for the record. Thank you.
Thank you. Senator Cortez Masto.
Thank you. Let me start off, Senator Hagerty and Senator Alsobrooks. Thank you for your work on expanding the coverage for depositor insurance. I look forward to seeing the final legislation as it gets introduced, if it hasn't been already. Thank you. To all of the nominees, congratulations, and welcome to all of your families. Appreciate you being here and your willingness to serve. Mr. Cassidy, I'm going to start with you, but most importantly, did your daughter make the trip?
She didn't. I wanted to bring her, but my wife said at 7 months she was just a little too young.
Yeah. Thank you. I appreciate that and your wife's concerns. Let me start with something that we talked about in the meeting that we had. In Nevada, housing costs have risen faster than inflation for renters and homeowners. There is an affordability issue in Nevada, and we talked a little bit about what we are doing in Southern Nevada around community land trusts. What I would like for you, if you're willing to, commit to working with my office to ensure that FHA guaranteed mortgages support land trusts. Would you be willing to work with us to figure out that financing for our housing community land trusts?
Senator, absolutely look forward to working with you and your office. It was great to meet with you and your team yesterday. I think we both share a passion for affordable housing. and it was great to discuss with you how much land is available in your state and your ideas in terms of how we could utilize FHA, specifically the 221D4 program, to build more housing units that can serve the affordable need of your state. So I'm excited, if confirmed, to work with you and your team on those ideas.
Thank you. And then I want to stress again, and we talked about this, like my colleagues, I have concerns about the loss of staff in several of these agencies, particularly HUD. And let me put even a finer point on it, not just HUD for us in Nevada, but we've talked about this for the Department of Interior and BLM. The reason why some of our costs are so high around housing is because we have to get our land from the federal government. 80% of our land in Nevada is owned by the federal government, 60% by the BLM. So we need that partnership between the two agencies of HUD and BLM working with us to lower those costs, to help transfer that federal land in a reasonable manner to really build housing and affordable housing in Nevada. We are down to one person in our HUD office. And similarly, in our BLM offices, we are losing people. So I am hopeful that with your voice, we will continue to make sure that there's staffing, adequate staffing, to address the needs of housing in Nevada, but across the country in these agencies. Would you be willing to commit to that?
Thank you, Senator. I very much look forward to working with your team to create efficiencies at HUD, to take inventory of all of our programs with the goal of deregulating and streamlining so that we can better serve the Americans that rely on our services.
Thank you. Thank you. Mr. Hollis, I don't have a question, but I just want to, for the record, just make sure that you are aware of this. I led, with one of my Republican colleagues, the bill that created both the American Women's Quarters and the semi-quincentennial coins for next year. And as the person who led the bill creating these celebratory coins in the Senate, it was never my intention that whoever was the current president in 2026 would be featured on a circulating dollar coin that year. My understanding is, and I know it's not your determination, it's the Secretary of the Treasury, my understanding is they're trying to utilize the legislation that I introduced to create that circulating dollar coin. It's not a commemorative coin, it's a circulating dollar coin. I hope your voice is utilized if you are appointed to oppose that. Please, go ahead.
Senator, I appreciate the question, and I had mentioned earlier that if confirmed for the Director of the United States Mint, I will always seek legal counsel, and I am 100% committed to always following the law.
Thank you. Thank you. Mr. Gormley, a term sheet for home equity conversion mortgage-backed securities 2.0 was published in November 2024. The HMBS 2.0 would resolve liquidity constraints and demonstrate Ginnie Mae's commitment to the reverse mortgage industry. The term sheet is now removed from Ginnie Mae's website. Do you, one, have any plans to implement the home equity conversion mortgage-backed securities 2.0? And also, I hope you restore it to the website.
So, Senator, just very quickly, on October 2nd, we published a request for information with our colleagues at FHA on the future of HUD's reverse mortgage programs, the HECM and the HECM MBS program, which HMBS, and we are committed to taking a more thoughtful approach and hoping to solve some of the operational and financial issues that have plagued that program over the years.
I look forward to working with you. Thank you.
Senator Britt.
Yes, sir. Well, thank you all for being here today, and certainly congratulations to you and to your families. Appreciate your willingness to serve at the highest level and look forward to being able to ask some questions today. I find it interesting and certainly appreciate that my colleagues on the other side of the aisle seem to kind of have a newfound concern about the culture at the FDIC. Particularly since we had the previous chair, Gruenberg, who had leading roles at the agency for over 20 years. And just to remind everybody, he was the acting chairman from 2005 to 2006. He was the vice chair from 2005 to 2011. He was the acting chair from 2011 to 2012. He was the chairman from 2012 to 2018. He was a board member from 2018 to 2022. From 2023 to 2025, he served as the chairman. It is clear he had decision-making capability and influence, and not to mention he was specifically mentioned in the report, and yet not one of my colleagues joined us in asking him to resign. And in fact, we saw in his hearing back in May of 2024, the ranking member said that she believed that his resignation would do nothing to improve the culture of the FDIC. So I appreciate that now that there is a concern about the culture, and particularly people having worked there, but I think it's obviously misplaced and certainly quite convenient. Mr. Hill, I appreciate you talking with me about this in depth yesterday, talking to me about who is no longer there, about the processes being put in place. I appreciate your commitment to me to continuing to create the culture that the men and women at the FDIC deserve, and certainly look forward to watching your leadership in that regard. On a policy front, I'd like to speak to your recent action in conjunction with the OCC to address the shortcomings in the matters requiring attention process. As you know, I led a letter with 10 of my colleagues to you about this issue and how MRAs are increasingly becoming ineffective and inconsistent. And we saw that with SVB. We saw that in what occurred days before and after that. If we're going to have mechanisms like this in place, they should be used intentionally to identify and resolve true financial stability risk, not to be used as a subjective supervisory tool or a check-the-box exercise. And so can you speak, Mr. Hill, to the MRA proposal you all issued, and generally to the FDIC's role in eliminating subjectivity and bringing integrity and accountability back to the federal bank supervision process?
Sure. Well, thank you, Senator. Thank you for the question, and thank you for your leadership and support on this issue. So the proposal that we issued with the OCC, that would address two of the key tools that bank supervisors use to identify weaknesses in institutions and require remediation, which are enforcement actions under Section 8 of the FDI Act and matters requiring attention. And the general objective of the proposal is to require that in order for weaknesses to satisfy either of those buckets, they would essentially need to be directly tied to a material financial harm, which means a loss or a impact to capital, earnings, liquidity, et cetera, or have a material impact on the risk of the institution failing. So the proposal would not prevent examiners from being able to take proactive steps, but the intent of it is to make sure that the things that we're criticizing are things that are truly safety and soundness concerns. And I think the example you mentioned of SVB is a great demonstration of the problem, where supervisors had identified a list of weaknesses. Most of those had nothing to do with the actual financial condition of the institution. The one criticism that was related to interest rate risk was focused on the process around the modeling rather than focused on the actual hole in the balance sheet. And so I think the objective, at least in my mind, is to try to shift that focus back towards the true financial risks and away from the process around how banks manage it.
Look, and I only have just a few seconds left, but I do want to talk about the cumulative impact of regulation on the smallest banks and therefore small businesses and main streets across our country. I think far too long in the last administration, no one was looking at the cumulative impact. No one was looking at the trickle-down effect, whether that was Basel III or others. I just would like a commitment from you that you will take a look at the impact to the smallest banks and commit to actually looking at avenues to provide regulatory relief there so that we can allow people to achieve the American dream.
Absolutely, fully committed to that, and that is that underpins a lot of the work that we're doing right now.
Thank you.
Mr. Warnock.
Thank you very much, Mr. Chair. Welcome, everybody, to the hearing. Mr. Cassidy, you're nominated to run the Federal Housing Administration. Do you know the median age of first-time home buyers in this country?
Senator, thank you for that question. It's great to see you today. Yes, the median age of first-time home buyers has increased from the mid-20s to now 38. We at the Office of Housing and the Federal Housing Administration really are focused on taking a hard look at that and encouraging more Americans to join home ownership. As you know, home ownership creates upward mobility, and we are focused on taking inventory of our various loan programs across the FHA to create efficiencies so that we can better serve the Americans who rely on FHA-insured financing.
So you agree with me that 38 is trying to be not impolitic here. 38 is a bit old. You agree with that?
Absolutely, yes. I was fortunate to enter home ownership at a young age of 20, utilizing an FHA-insured loan, and it's that type of opportunity that we are focused on under the leadership of Secretary Turner to bring to more Americans across this country. And I look forward to working with you and your staff on those initiatives.
Home ownership is indeed the American dream. I grew up in public housing, and I know how this can feel very evasive or elusive to a lot of families. And because of good federal public policy, I'm a Head Start kid, Pell Grants, low interest student loans, was able to get through college at a different time and buy a home not at age 20, but relatively young. And what worries me is that this is slipping away. It's harder for kids who grew up like I did on Cape Street in public housing to make their way there. So this is why the work of FHA is so very important, and that the products that you use to help get young people into their homes ought to be a concern for all of us on both sides of the aisle. What plans do you have to address this crisis and boost the American dream of home ownership for first-time home buyers who are not sitting on a 20% down payment, which I wasn't also, by the way?
Yeah.
What tools do you have, and what's your plan to improve that situation?
Senator, thank you very much for that question and that concern. Across the FHA loan programs, particularly as it relates to the single-family program, which serves 8 million homeowners, just this year under the Trump administration, 800,000 plus new homeowners have taken advantage of the FHA loan program. Since I've started in April as the Principal Deputy Assistant Secretary for HUD's Office of Housing and the FHA, we've been taking inventory of FHA's loan programs with the goal of streamlining the process, cutting out burdensome red tape that can lead to additional cost for homeowners. We've been working with lenders, stakeholders. We've had them into HUD. We've heard their concerns. And the goal is efficiency and deregulation so that we can serve the millions of Americans that rely on FHA-insured financing.
Would you
as you mentioned, FHA, allows first-time homeowners to put down as little as 3.5%, and that really is a crucial first step towards Americans entering home ownership.
Would you support? Hold on. Would you support efforts for first-generation home buyers, like my down payment towards Equity Act?
Could you repeat that?
Would you support my proposed down payment towards Equity Act, lowering the barrier so that people can get into the marketplace?
I think it's incredibly important that we utilize the FHA loan programs with the safety and financial soundness as top priority. I look forward to hearing more about that and working with your office and hearing your concerns. FHA plays a very crucial role in the mortgage market.
We're clear about that, and I'm only moving you along because they give me very limited time, and I appreciate that. Do you think shortening time frames for families to purchase foreclosed homes will help families or hurt families who are trying to buy a home?
Senator, thank you again for that question. Across FHA, we are looking at speeding up processing times, being more efficient stewards of these programs.
So you're aware of your policy that shortens the time frame for families to purchase foreclosed properties? I think that increases the likelihood that you'll have more private investors buying homes rather than folks who are trying to get in for the first time. And this is a real problem. I live in Atlanta, where 25 to 30% of the single-family homes are owned by private investors, and so these policies matter. Give me a Baptist 20 seconds.
I already did that.
You gonna let him answer the question?
short, and then we're
Thank
going to also, Brooks, you're taking.
I appreciate it. I'm done. I'd
Terrible.
like you to
Senator,
answer the question.
thank you for your question and your concern. We are working daily to create efficiencies across FHA so that we can continue to serve more American homeowners.
You didn't answer my question, but thank you very much.
Senator also Brooks, you now have 5 minutes and 43 seconds because of the pastor.
Oh, my goodness. Well, thank you so much, Mr. Chair. Thank you as well to Ranking Member Warren. And also, I'd like to say thank you to our witnesses for your willingness to serve, and thank you so much for being here today. Now, I would be remiss if I did not begin by acknowledging the pain that has been inflicted on so many Marylanders of my state right now, Marylanders who serve at the very agencies that all of you have been nominated to lead. And this is because the government remains shut down. The government remains shut down because this administration refuses to come to the table and negotiate a solution to fund the government and make sure that health care is affordable to the American public. But there are important bipartisan issues that I also want to address today, and so I'll get to those. Mr. Hill, I'd like to get your thoughts on deposit insurance reform. As you've heard already, Senator Hagerty and I are working on a bill to increase stability for businesses and their customers by expanding the deposit insurance available for business checking accounts. After the Silicon Valley Bank collapse in 2023, individuals and small businesses questioned the security of their deposits, and many of them believed that their deposits were only truly protected if they were housed at large banks that had the implicit banking of the federal government. So our Main Street Depositor Protection Act will give businesses certainty that up to $10 million in payroll accounts held at neighborhood banks and credit unions will be insured by the full faith and credit of the federal government in the event of a crisis. So, Mr. Hill, as I'm sure you appreciate that the first question everyone wants answered about changes to deposit insurance is who will pay for it. And one of the critiques that we have received again and again is that any deposit insurance increase will be costly for banks. And so we've addressed this feedback head on by lowering the coverage level and creating a 10-year transition period for the smallest banks. But I wonder whether you might be able to explain to this committee how deposit insurance premiums are calculated, and also answer whether or not they're based on the bank's insured liabilities or total liabilities.
Sure. Well, thank you for the question, Senator. So as a general matter, the banks are assessed based on a formula, and that formula is primarily based on total liabilities at a bank. That's the assessment base. And then the assessment base is multiplied by the assessment rate, which is based on a risk-based scorecard, and that includes things like supervisory ratings, capital, things like that. For large banks, under the large bank scorecard, there is an element of where insured deposits. So if insured deposits were to go up, that piece of the formula would increase. But that overall has a very small impact on the assessments. And so the major contributing factor is the bank's total liabilities.
Okay, so then it's safe to say that an increase in insured deposits would not automatically raise the insurance costs for banks. Would you say that's correct?
For small banks, that's 100% correct. For large banks, there might be a small increase, but not material.
No.
It would be very small.
Okay, thank you. And as I noted earlier, our revised bill creates a 10-year transition period for community banks during which they will not pay any new assessments to offset changes to the deposit insurance reserve ratio. And as you know, crafting the right transition period is an art, not a science, and so we want to strike the right balance. So would you also expect to happen to deposit, would you just kind of tell us what would happen to deposit insurance assessments on community banks after that 10-year period?
Thanks for the question. So there's a lot of uncertainty around any predictions that we might make in terms of the impact that the legislation would have. There's uncertainty first because we don't have data on how many uninsured deposits are above or below certain thresholds other than the 250,000. And then the other piece that we don't know is what kind of behavioral changes there might be in terms of funds moving from certain types of deposits to other types of deposits, or certain institutions to others. Based on that all being said, based on the estimates that our staff has produced, it is at least possible that we would not need to raise assessments in response to the legislation. The the expectation, again, based on estimates that are subject to significant uncertainty, the expectation would be that the reserve ratio over that 10-year period would grow at a much slower pace than it otherwise would, but it wouldn't decline. And if that's the case, I think there would be a justifiable argument not to raise assessments. I think there are a lot of considerations that go into how we might respond as the steward of the DIF. But I think overall, expanding deposit insurance has a mixed impact on potential resolution costs, both for the reasons that Senator Haggerty mentioned earlier about things like reducing run risk, things like that, and then also post-failure, expanding coverage increases the cost of liquidation. So the kind of the ceiling on the potential cost goes up. But the flip side is it can make the failed institution more attractive to potential bidders because insured deposits tend to have more franchise value. So again, I think there are a lot of considerations on both sides of it. But I think there's at least some justification if the reserve ratio didn't decline, that there would be a justification for just leaving assessments where they are.
Thank you, sir.
Thank you.
Thank you, Senator. Ranking member, with closing comments?
Thank you very much, Mr. Chairman, and thanks for doing this today. You know, I'd just like to talk for a minute about the concerns regarding housing affordability. No one has worked any harder than the chairman, and I've tried to be a good partner in working with the chairman to make housing more affordable in America. I think we are truly in a crisis. Mr. Moreno says, in fact, though, that housing has become more affordable. So let's take a look at some of the facts. There is currently no community in the entire country where a minimum wage worker can afford the rent. And the median home price in the United States has reached record highs under President Trump this year. And Americans just can't afford to buy a home. In fact, the homeownership rate is already down nearly 1 percentage point compared with this same time last year. I think that most Americans would be really surprised to hear that Mr. Moreno thinks that housing is now more affordable. And I am very glad to have worked with Chairman Scott to pass the bipartisan Road to Housing Act out of the Senate and to make a meaningful effort to tackle housing supply and costs, and that we are working together to get this bill signed into law. Housing is not affordable, Mr. Moreno. We need to make it more affordable as a team.
Well, thank you, Ranking Member. That concludes the question and answer portion of today's hearing. Before I go to my prepared remarks, I do want to comment on the Schumer shutdown. It continues not because this administration fails to do its job. Frankly, this administration is ready to reopen the government. Frankly, it is the President of the United States, Donald Trump, that has found a way to keep women, infant, and children, the WIC program, funded, albeit temporarily. It was the President of the United States that found a way to pay our troops, albeit temporarily. But because we remain in a shutdown, our law enforcement officers, one who's standing to your left, my left, your right now, goes unpaid. Every single officer in the United States Capitol goes unpaid. Our staff sitting behind us goes unpaid. Air traffic controllers today go unpaid. On Saturday, the SNAP benefits food security for 42 million Americans will cease. Not because the President of the United States refuses to do his job, it's because my friends to the left refuse to come back to the table and open this government. They did it 13 times under President Biden. They've done it not at all this term of President Trump. I'd like to thank our nominees for testifying before the committee today, and thank you for your willingness to serve our country. For senators, all follow-on questions for the record must be submitted by noon tomorrow. And for our witnesses, please respond by Monday, November the 3rd at 5 p.m. to the written questions you receive in order to facilitate this committee promptly processing these nominations. With that, this hearing is adjourned.